The Federal Reserve has just announced its interest rate cut, bringing new sentiments into the market. While it should have been a positive sentiment, the market is currently reacting negatively. So, if you want to know what's happening and what's currently going on in the market, well, stay tuned. Hey guys, welcome back to the Republic Labs YouTube channel. In this video, we will be talking about the current interest rate cut and its impact towards the market, and also some economics data to help you understand what's currently going on. So as you can see here, the federal interest rate has just been cut, previously from around 4% to currently now around 3.75%. This is the new base for the federal fund rate in America. So it's looking like the Fed is having a dovish stand. While it should have been a positive sentiment for the market, currently the market is reacting negatively because a lot of people doesn't trust that a dovish statement or dovish policy will be better for the economy. As you can see here, the dovish policy has been currently implemented from August 2025 to now December 2025, as the interest rate itself has been lowered from August 2025 from around 4.5% to now December 2025 at 3.75%. Well, it should have been positive because with a lower interest rate, there should be more liquidity in the market. However, this is not the case because the current economic condition is not really better. The statement is echoed by the FOMC. As you can see here, the FOMC stated that available indicators suggest that economic activity has been expanding at a moderate pace. Job gains have slowed this year, and unemployment rate has edged up through September. Also, more recent indicators are consistent with these developments. Inflation has moved up since earlier in the year and remains somewhat elevated. So as you can see here, there are a couple of statements that essentially leading up to saying that the economy is still uncertain, which is why the interest rate cut might not continue or might not have been the best policy. As you can see here, the only positive statement is that the economy has been growing at a moderate pace and job gains have increased, but it has slowly increased. So there are a lot of negative statements here, which is why the market is currently reacting negatively, because the market is looking towards for the economic activity rather than the economic policies, especially monetary policies. This is because people are looking for real economic evidence instead of policies. This is the base of most people's strategy nowadays, because they only want real proofs instead of just policies or statements from government officials. Also, Jerome Powell echoed the statement, stating that we are well positioned to wait to see how the economy evolves, essentially stating that currently the Fed will not cut more interest rate until the economy becomes better. So currently, a lot of people are having the perception of wait and see, whether they are an investor or government officials. However, there are still two statements that might save the sentiment in the market. The first one is a statement from Jerome Powell that stated that there will be $40 billion of reserve purchases in 2026. This means that the Fed will purchase treasuries from commercial banks, essentially increasing liquidity in the economy. The second statement is that currently, Jerome Powell is projecting that the real GDP will rise in 2025 to around 1.7% and 2.3% next year. So hopefully these two statements can save the economy. However, coming back to my previous statement, a lot of traders and investors are currently looking for real proofs instead of statements from government officials, which is why they need real proofs. And looking at the economic data, currently the economy is not really looking good. If we take a look at job openings data, as you can see here, the data has been increasing from July. However, from September to October, the increase has not been significant, in line with what the FOMC stated. Data also shows an increase in unemployment rate. Essentially, if we take a look from June to September 2025, unemployment rate has been increasing, meaning the economy is not really better. Also, as you can see here, inflation rate has also gone up, shying away from the target of the Fed, which is at 2%, because previously, in April, the target is close. However, currently, it is far again, since inflation is at 3%. So overall, Fed officials want to see interest rate go down if the economy is better. However, President Trump doesn't think so, because he thinks that if the economy wants to become better, the interest rate must go down first. So there's an unalignment between the president and the Fed. As you can see here, Trump wants the interest rate to go down for the economy to become better, which is why currently there's a political war going on, as Trump himself is looking for a new Fed chair. This is to replace Jerome Powell and to be in line with his perspective. Currently, he is looking at Kevin Walsh because Kevin Walsh has been known to have the same statements as Jerome Powell. So overall, there are a lot of economic uncertainties and policy uncertainties, especially in the United States. Which is why, with a lot of uncertainties, people tend to sell and wait and see. Which is why, after Jerome Powell's speech and the Fed interest rate decision, Bitcoin has gone down significantly, currently going down from around 93,000 US dollars to now 89,000 US dollars. So overall, there are a lot of uncertainties, which is why you need to manage your risk better and not FOMO into anything. Well, that's all the information I have today. If you guys like contents like this, don't forget to like, subscribe, and click that notification bell so you guys are notified when my next upload. Cheers, guys!